Good morning, everyone. Welcome to TopstepTV London session. My name is Deeyana Angelo. I've been trading for 17 years. 12 years out of that, I've been trading the futures, mainly specializing in crude oil and gold, but recently I've been stepping into a lot more of the precious metals. As you can see, I do have a trade going in copper at the moment. It is a full-size copper because it's a slightly bigger XFA. So we can talk about the tip of the week, which is trading expectations. Set realistic profit goals and accept losses. They're a part of trading, right? Now, when it comes to setting realistic profit goals, I'm going to talk about setting them on a per trade basis and also per account basis, right? For me, especially, I've said this before, that when I'm off my game, I tend to chase bigger targets. Suddenly I start to demand these swing trades, but, as intraday traders, we can't hold trades overnight. So obviously, we have the time constraint. And unfortunately, that means we have to find the best profit target for the trade that you're in right now. And then we also have that other problem where the markets are ranging about 56% of the time. So if you're constantly chasing bigger moves, it means you're always going to be sort of trying to play catch up or having loads of unnecessary losses because you have that big target in mind. And that's something that I've struggled with because I come from swing trading for the first 5 years. That's what I did. So naturally, I'm very adept at looking for those bigger opportunities. But that's not to say that for every single trade that I do, that I should be chasing my 100, 200 ticks. So something that's worked well for me is to limit my profit expectations on a per trade basis to about 45, 50 ticks. And that's something that I've tested statistically. Most moves and most trades of the type that I do, they will have that sort of movement in them. I very rarely kind of chase breakouts. But if I do see, let's say, a neutral day type, then that target is going to go even lower. So I'm going to be suddenly very happy with 25 to 35 ticks, And I think that's something to keep in mind because I've had some traders come to me for coaching, and one of the reasons, like, they have extremely low accuracy, but some of them aim for targets of like 8R, 10R. That's a bit unrealistic on an intraday basis because of the time constraint. So even if you see a good opportunity, you're going to run into a time of day where things are a bit slower. You have lunchtime, right, in New York. So it's like you're thinking, wow, I caught a tiger by the tail. It's just going to keep going. And then it starts to go the other way. And you're like, what's going on? And it's because you run into a quieter period. So we have to take in the time of day when we're trading and initiating the trades, how long a trade has been in order to decide whether this is actually something that we should keep holding, right? So right now I'm in a copper trade. I'm going to explain what I'm thinking there. It's a copper short. As always, let's begin our analysis on a very, very large time frame. Now, we're sitting in, I suppose you can call this a megaphone formation. And one of the things with megaphones is that they act as a range. So you have this expansion of the range, and what's expected is for the price to go somewhere near the bottom of the range or the top of the range and then to turn around. So it's kind of like a range-bound trade, but on a very, very big time frame. And when it comes to range-bound trades, you can have a range-bound trade on an intraday level. You can have a 5-minute range-bound trade, and you can have something like this. So one of the reasons why I'm doing this trade is because it's breaking out of the initial balance, which is actually pretty conducive with the open sentiment. We're opening below London value. For the purposes of the London session, I do use London specific regular trading hours to calculate my value areas and my average session ranges. That's where they come from. And I use a shortened London so that I don't pollute the data with the overlap and with COMEX in this case. So my idea here is that we are going to test somewhere near the lows, and then I basically go and look for evidence and intraday levels to see whether I can find some sort of a trade going on. So that's what's happening on the daily chart. If I go down to a 4-hour chart, we get a more zoomed in level, and I'm going to expand this. And it still doesn't mean this is going to work. I mean, it's in some profit, but sometimes it turns around. So, then I'll have to manage it if that starts to happen. But if you see where my target is, it's literally at the point of the market shift where we created a demand after the big megaphone was printed on the daily chart. So that's, I call these the conterminous lines. Conterminous meaning common something, so something that's common to two parts. And to me, whenever we create either a demand or a supply, you have this point of equilibrium, right? You have a point of equilibrium where the market is sort of almost consolidating and then it breaks to the opposite side. So I call those conterminous lines, and they are very reactive. So rather than aiming for a full low, I aim to take profits right at the point of the market shift, because we expect to have some people still interested in taking the price the other way from there. And that's why whenever I look at a price, I will say that everything is a zone. So it's not a singular price point. This is a zone. But for my targets, I do like to take them somewhere where I perceive the danger already existing of the opposite party coming in. I don't think we have anything now that we broke this low at 429.20. There is not much in the way, right, until we reach the demand. So we'll see whether this actually has some traction. I would like to see some more initiation here. And every time I'm in a trade, rather than getting completely biased in one direction, I also like to play a devil's advocate. So to see what would invalidate me, what would invalidate my trading idea, and what are the pros and cons for this particular trade. So a big plus is obviously that we're breaking outside of the initial balance. We are going with the sentiment. We do have that megaphone range on a daily chart. And when it comes to looking at the other side, well, maybe we fell away too far, right? And there is a danger when you open a little bit outside of the range from the previous session, so below value but outside of range of the session, that there could be a ping back as a mean reversion. So that is the danger here. So far, we're not seeing evidence of that, so that's good. But I do have that in the back of my mind. I'm like, okay, let's just see how this goes. So I'm always trying to be suspicious and defensive whenever I'm in a trade, rather than hopeful and high on hopium. Now, the way I like to track how the actual trade is doing, I do use very low time frames or no time frames at all. So 2 minutes, 100 tick chart, book map, and I'm going to explain it here without book map because I didn't even log into it yet because I'm afraid I'm going to overload the stream or my computer. So one way to track how this is doing is to use a ribbon of about 9 EMAs, 3 9 EMAs. It's a similar thing that Mohammed does, but he uses it, I think, as levels rather than just as a timing tool. And basically, as long as the slope is downwards and as long as the price is contained heavily inside the ribbon or below it, the trade is valid. This is like an active trade management tool for me, right? So everybody has their own way of doing things, and this is my way of doing it. So when this starts to shift, and when I see that the price is popping outside of the ribbon, it's not necessarily I jump out of it as soon as that happens, because you can't have these sort of moments. So the market starts to fall down, then it sort of goes a little bit up, but then it migrates back down. So with the copper trade, it's not as crazy as Nasdaq, right? So it doesn't just go and go and go. It does have a bit of an ebb and flow to it. So effectively, you are looking, or I am looking for the price to completely close one candle in the direction or in the opposite direction to my trade above the ribbon. So that's what would get me out of this trade. So if we go all the way up over my entry, and then the next candle sort of closes outside of it, and it's still green or white on my charts, that would mean an early exit for me, okay? So hopefully that's a more systematic way to manage your trades. And sometimes a 100-tick chart might be too much. Like, for example, I find ES is too... It has too many ticks in it, right? Loads of people trade it, right? So I use a 500-tick chart on ES. And then if you want to slow things down, let's say you want to keep this trade going for a couple of hours because you think there's, maybe a trending day or something, you don't want to be taken out too soon, you can use 500 ticks, you can use 1,000 ticks to do the same thing, depending on the speed or the product. But copper is not that, it's not that fast. And it's a pretty orderly product. You don't get too many sort of whips like you do in some of the other insane, thinner products. What am I typing here? Okay, let's have a look at a couple of questions. There's gold on a downfall with Bitcoin going up. I don't trade Bitcoin. Some people think it's a safe haven. I don't think that Bitcoin has much to do with this. Is it on a downfall? I mean, is this a downfall to you? We're reaching a demand. To me, this is just a pullback. This is the weekly chart, right? So maybe if we get our heads out of the intraday time frames, we can actually figure out some aha moments. So let me put this side by side like this, and then we're gonna have a look at gold on this chart as well. I'm going to try and get my attention in two places. And sometimes I'm not that successful at doing that because it's early and I'm still waking up. But yeah, we'll see. I will try to keep tabs on that. Right, so what I can see in gold is that we are, in a pullback, much needed pullback, if I was going to be the one to say anything about gold and screaming upside. I mean, look at this. It just went on a relentless, absolute, this is a weekly chart, by the way. A relentless upward move. I mean, look at it. Almost no pullbacks. So is this healthy? I think so. But at the same time, I don't think that... I don't think that this is a kind of a downtrend just yet. I believe this is a test of a demand because we went too far, too furiously, too fast, and now we're just looking for liquidity. We're looking for where we're going to establish ourselves. And typically before these big trends break, there is a range that gets established. I just put my hair in a weird way. And then only after some distribution, we might actually get a trend change. So I wouldn't be quick to say, oh my God, this is definitely gold falling out of bed. I would just say this is a healthy pullback fueled by American elections, maybe some FOMC rate decision, because we did cut by 25 basis points last time I checked. So yeah, be careful when you're analyzing things. And take a look at the large time frames. They can provide clues that are not always that obvious on lower time frames. I mean, especially when we're talking about 5 minutes, 100 tick. It's this is a demand, right? Now let's see what's going on the daily chart. Daily chart, well, we actually have a demand zoomed in, slightly lower down. Tried to go higher. This was a big jump and then a pullback. And now we are ever so slowly trickling lower. But we do have demands here. We do have demands. And right now, from this visible range, we're sitting dead in the middle of volume point of control. So for me, this would be not the best area to get involved in gold, which is why I'm not in gold at the moment. But if we fall a little bit lower, or if we manage to find some consolidation or something, yeah, we could look at it, but I wouldn't be shorting it just yet. Maybe if we're like later on in the day and we had a nice pullback upside, yeah, maybe I would short it. But just breakout trading at these levels, to me, like, again, not a signal service. We had a disclaimer up there. But to me, this would be middle of the middle on large time frames and sort of in the middle of nowhere on lower time frames as well. So I need better levels in gold. Odysseus says, Dee, we need a tick counter on TSX. We have one, but you're not going to have it if you're using tick charts, because tick charts have no time. But we do have it. So if let me just go to, someone pressed the button to go outside, but I can't go. Let me just go to a time-based chart. So, okay, so if you look here, I've just moved to a 2-minute chart. Can you see the timer here? I don't know how well you can see it. So it's like 1:48, 47, 45. Yeah? So you have a counter. There is a counter. And how you put that down, put that onto your chart is very, very simple. So you go right click, and then there's this thing called countdown to bar close. So put that on, and you will have the bar counting down. However, like I said, if you're on a tick chart, there's nothing to count down. So maybe if they introduce a tick countdown, that could be something. And if you want that, perhaps put in a request feature. But yeah, so it's already there. We have the tick counter. Oh, tick counter. Sorry. Yeah. Again, I'm still waking up. You said we need the tick counter. Yeah. So we have the time counter already. If you need a tick counter, you will need to either go to a post that already has that. I don't know whether there is, because I'm not, I don't really need it. But yeah, so if you want the tick counter, upvote the feature. And this is now the perfect time for me to push my Eurex desires as well. So I'm going to be putting the Eurex link yet again in the chat. And yeah, so upvote Eurex so we can get DAX, because DAX moves much better than any of these products. And then if we can get it before the end of the year, that would be nice, but I'm not holding my breath. Okay, let's have a look at some of the questions. So I see that you use very often tick charts. Why do you prefer it? I don't prefer it. It's a tool for me, right? I still have, don't forget, I have a whole other charting thing on my other screen where I have all of my levels. This is my value area. I've got overnight VWAP, initial balance, break of the initial balance, average session range low, some options levels related. So I do use time, but when it comes to the trade management, that to me doesn't have much to do with time, because I'm looking for the strength of the move and how long that's taking. And if anything else starts to put in a wrench in the works, either the trade has been in for too long, or we are stalling out, or is turning around or something, I want to be able to see that. Now, I use a combination of tick charts on 100 tick, the ribbon, and bookmap, which I usually have over on the other side on the screen here. And Yeah, so it's a timing tool for me. I wouldn't say, oh, we're touching the 9 EMA on a 100 tick chart, therefore that's another short, so I'm going to scale in. That's not the way I use these. It's literally to see how well the momentum is doing, right? Short Life Hack says it's going to be a dead volume day later. All the huge moves were last week. I'm not so sure about that because, yes, this is usually a lighter week in releases anyway, just by standard default. But I think there's going to be moves because we have the knock-on effect. Because remember that the moves last week were caused by a very, very big event. We've had the elections in the U.S. and we have the Fed rate cut. So that fundamentally tends to take a number of days before the banks have actually positioned themselves for the new world order, I suppose. So that means that we could still have quite a bit of movement happening. So I wouldn't necessarily be going, oh yeah, it's going to be dead, I'm going to go away. In fact, last week I didn't trade that much. I used it to, to take a payout and to just chill out for a few days and not be involved in any sort of accounts that matter. But having said that, I did get ticked out in my live on Friday, and then it went straight to my target of 150 ticks on crude oil. So that was a bit annoying, but I was right on the direction and just could have used a slightly bigger stop loss, but there you go. Because I was stingy on the stop loss. I was like, I'm going to use a 17 tick stop. And then it whacked me in the face and went straight to my target. Okay, so some caution here now with this copper trade because we are popping outside of the ribbon. And if that now decides to hold outside of the ribbon to the opposite side, that will be my exit. So that means this trade is probably over. But on the plus side, we have some single prints left behind on the profile that I can see on the other side. We extended the initial balance. So if we can hold inside the ribbon and not create a full-on white candle above the ribbon, then that still pulls off, right? So you have to be very systematic and not attach any emotional things to it. Obviously, in the beginning of your trade, it's more difficult because you might have had one of the signals that you're looking for an entry, and then it goes against you. But at that point, you should probably just either kill it. If it immediately goes against you, like you click, it immediately draws down. That's a bad sign, right? So I would kill that. But if it just kind of meanders away from it, then into it, then a little bit of drawdown, then away from it, I would probably give it time. This is where you need to commit to your stop loss and the reason why you have your stop loss there. Without, clicking. That's how you get paper cuts. You think you're wrong on the trade because you've exited too soon because you're afraid of the loss. So, sizing down and trading appropriately to the account size, the buffer that you have, not the daily loss limit that they provide us, or maximum loss limit, that should tone down the emotionality, and you'll be able to just manage it in a more objective way. So unglue yourself emotionally from the trade and just go, okay, what is my early exit? And if you don't have an early exit, you need to come up with one, okay? You need to come up with one. I have one of my dogs pressing the button to go outside, but I'm kind of hoping the husband's going to take care of that. And if not, I'm going to have to jump away for like a couple of minutes. Because I think it's Mimi, it's Astrid, and so some of my dogs, they kind of lie. They need to go out. They just want to go out there, like either just bark at squirrels or see what's outside, get some fresh air. But we do have some of them that are always like, yes, I actually need to go, so please let me out. This is quite funny. Lisa R says, hi Dee, first time here. Love to see your trades. Thank you. Thank you. But, don't lower your expectations. Every trade might not work out, and we need to manage it. Now, the problem with me stepping away from the screen is that we are in a sort of a bit of a decision moment here, right? So now if I step away, I'm going to have to be like rushing and all of that. So I don't know, maybe I can try kill this and then enter this again because I can't watch it. Day trading is real, says my 4 dogs keep me busy also. Yep, I feel your pain, man. I've got 8. Odysseus says he was the first one to upvote the post. Thank you. Yeah. All right. Morning Dee and community, new week without the politics. Let's go. Yeah, without the politics. We have Trump back in the office. Does that really mean that we're going to have a week with no politics? He likes to tweet or do X posts. It's not the same, is it? X posts. It's like Twitter, tweets, right? What are your thoughts on that? I really dislike the whole X thing. It sounds like some kind of an X-rated website or something. Ooh, X. It's like, no. Tweets, tweet. You're tweeting. You're it's news. All right. So if this doesn't turn around soon, I'm going to kill it and then reevaluate. But technically, this is still not, what I'm looking for. It's just that the dog keeps pressing buttons. All right, let's kill this, and then I'm gonna do this again. I'm gonna be back in a couple of minutes. All right, so that was Remo Bear. He doesn't lie. Hello, Remo. You want to say hi to everyone? Come up. Yeah. So that's the boy that wanted to go outside, and he's now happy. All right, so this did pop up a little bit, I think, over my entry. But now if we again go down, we still have this initial balance low. That seems to be causing a resistance, which should be another short trade, but I still need to wait. And for that, I want to see how a 2-minute chart looks like. Now this is price-based. I'm looking for like a 3-bar reversal or bearish engulfing 2-bar reversal or something that's going to tell me that we are continuing downwards. Paul H says, morning Dee. We had Paul here last week with Ray. He says, just arrived, I'm short gold from 26.76.9, was 5 micros, took profit, now only 2 left running. Yeah, nice trade, very nice trade. Paul is a great trader, he is very controlled, and this is why we had him on. He talks a lot of sense, he thinks through his trades, and I really, really love what Paul is doing. Okay, looks like we might continue here, so now that I have Rimmer, hey, yeah, I tried to the trade because of you, Well, that's all right. So, okay, again, slightly lower entry, and thereby a lower target, because we are now not in a good position. But it's still a trade. Now this would be more an initial balance rejection with a view to turn this into a more of a trending day. So let's see if that happens. 10 trading. Hey, Francis is here. Currently short NQ. If anyone's trading NQ, I know you don't trade NQ during London. Yeah, that's true. So Francis is going to be back on Power Hour this Thursday. It says, feels good to be back after last week. Yes, awesome. All right, I'm just going to put my little fib sort of tool. Yeah, so copper and gold, they don't really correlate as in like, oh, there's like a huge correlation. But sometimes gold moves can contribute to copper, but they're not. Like, if you look at copper on the daily chart and gold on the daily chart, it's like heaven and earth, right? So let's do that just for posterity. And second one, GC, 1 day. So if you look how they are across large time frames, it has nothing to do with anything. So at the time when copper was just flat, this one was going on a massive bull run. But sometimes if it's something to do with the economy and stuff, it will act intraday. Don't sniff around the keys. Don't touch anything. They will, like on an intraday level, it will act sort of as a push lower. So that's an additional kind of correlation that I sometimes keep a pulse on. Now, you don't see my other screen, but I simultaneously monitor most of the markets, right? I monitor platinum, copper, silver, gold. I don't really trade silver on these accounts because it's I feel like it's too expensive. And then I have crude oil, RBOB, and natural gas on the other screen. And then I have 3 equities. So I have ES, NQ, and DAX. And just by looking at how everything is moving, it can give me a pretty decent idea of what sort of a day we have and whether we maybe have some kind of a risk on or risk off sentiment, right? So, like I said, sometimes gold can be a nice push. So I'm going to put them side by side again. And we're going to go down to a more intraday time frame. So initial balance low, so the invalidation point for this trade that I'm doing right now would be if we close, well, not necessarily if we close, but if we start spending time above 429. If we start spending time above 429, that would be not a great sign for this move. But as long as we stay below initial balance for London, then that should be okay. I'm going to change this to just a regular line. I'm going to, there we go. Okay, let's do red line. And then as usual, I'm going to mark off the initial balance, which was like this. Come on. Okay, there we go. Okay. So that was the initial balance. What's going on, bro? Can you can you settle? Do you want to go down? Yeah, it feels like you want to go down. You're a bit wriggly. Come on, go down. Go on, let's go. All right, remember Bear is getting all wriggly, so it's time for him to go and settle somewhere else. Day Trading Israel says, I like MQ shorts. I don't really like trading NQ this time of the day, but Francis is your man for that. He's in chat, and he's short, right? So let's have a look. I don't have all of the levels yet for NQ. But just like an overview. And the thing with London, it can go counter trend to what the next session will do. So some kind of a short is actually on the cards, as long as you don't try to hold that through the cash session later, because usually they kind of reverse. So especially if you're short and then the other session comes in and you're like, well, okay. It's turned around ferociously and smacked me on the face, and now I lost all the profits and blah, blah, blah. So you don't want that. And NQ likes doing that to people. Emotionally, it's a very tough product for most because it rewards you a lot, but it also smacks you in the face a lot. So to me, I gravitate towards some calmer products at this point in my career. Now, you know, I did trade NQ a bit more during the COVID times because they suspended crude oil. So I was like, what do I trade now? And then I did trade it, but I got tired of its nonsense like very, very quickly. Because it doesn't respect levels, right? You have to have something else, like look at ES or SPX and then match the levels there, and then you get a more zoomed in idea of why it's whipping so much, and it's a thin product. So just the labor intensive nature that you need to work on with NQ is just like ugh. And you know, emotionally it's a lot easier to trade something like copper. You know, as you can see, it's not moving crazily. It's just, you know, it's doing its thing and it's weaving and ebbing and flowing, but it's not like whoop, 50 ticks there, 50, 100 ticks there. So it's a lot more stable, if that makes sense. So what do we have on NQ? So intraday, obviously we're above everything. We went over Asia high, but also Friday's high, and now we turned around. It did technically fail the downside auction, I will say that, but it's also consolidating. So whenever I'm looking at whether the failed auction long is valid, I don't want to see a distribution to the other side. So I don't want to see bearish engulfing and then consolidation, because that means that we are definitely distributing. Okay, so that's not, you know, that's not a good thing. Another thing I'm not too happy about is that we're glued at VWAP here. So I would like to see weakness at VWAP on Nasdaq for some more serious moves. But it does look like, for now, it is turning around. So, yeah. Fred Flintstone D, what are your 3 EMA settings? It's just literally 9 EMA moved to high, close, and low. So I'm going to show you that. Let me do this. And actually, let's go down to a 100-tick chart to see what's going on there. And you see, I mean, this trade is still not invalidated fully because we don't have one candle outside of the ribbon. So I have to respect the stop. Like, there's nothing for me to do here. Do I want this to lose less? Yeah. But right now, it's not really telling me much. And like I said, my systematic way of doing things is that an early exit has to be one candle opposite direction outside of the ribbon. So if I go to here, so here we go. So MA 9 close, EMA 9. So that's the middle one. That's the first one that I put on. And then I add this one, which is the top one. So 9 EMA, same thing, but closing on a high. So you get a whole bunch of stuff here, but you close on a high. And then same thing for the third one, except it's closing on the low. That way they will never cross over. So that then shows me a very, very different outlook from like VWAP or regular moving averages, which I'm not really that big of a user of. Now, one thing that I can do here is if it doesn't carry on at this point, this late in the trade, and also basing this on the fact that Rimmer got me out of a trade, so I'm kind of fumbling here because of that. I could scale in now, so let's try and do that. And if it hits me on the face, it's fine, but it's kind of adding, you know, a little bit of risk, but nothing too bad. So now I have the opportunity to improve my average price. Obviously, if you're wrong, it's going to smack you in the face. But I also know that my maximum adverse excursion on copper is usually about, I think it's 16 ticks from what I remember. So because of that, this to me is a scaling in opportunity. So you know how when I shared my my whole like 15-day run on Twitter, quite a few people were like, what? You did 22 trades? You did... Well, this one will be showing like already about 3 or 4 trades. And how many have I done? Well, this is all just one idea, right? And this is now a scaling. So it counts that. Now, in order for a platform to to make sure that they are only using one trade idea and then all scale-ins under that idea, you have to put in a separate code that will keep pinging back to the orders to see whether the order is open, and then to sort of lump it all under one trade rather than counting several. So it is a bit tough to do that code-wise, and I can understand why most of the platforms will be a little bit confused when it comes to scaling in and scaling out. So whenever you see anyone, you know, with maybe about 12 trades, it's very likely that they scaled in and scaled out, especially if you're like trading micros or something. A lot of the times you'll be in with 5 micros, 7 micros, 10 micros, and then you'll be scaling in and out. All of that will be counting as additional trades per day. The only time it doesn't do that is if you decide on the position and enter. Now, this platform also uses dollar-based amounts for stops. So sometimes if I want to be in like 3 or 4 positions, 4 lots, I will be entering it 1, 1, 1, 1, right? So that if that becomes my default size, I will be like 1, 1, 1, 1. Just because I want that initial 28 to 35 tick stop loss that I have as a system, and you know, based on the liquidity of the product. But if I go 4 right away, it's gonna put like a 6 tick stop on there, and then I have to like scramble around to do things. So that's also what sometimes bumps up the number of trades that you see on the reports. So just keep that in mind, you know. But generally, I'm not somebody who goes crazy. Like my crazy day is if I trade like 13 trades, like 13 trade ideas that day, and that's like, wow, I'm losing control here. Whereas for some other people, it's 40, 50, 100, you know. Okay, let's see. I've burned so many accounts, Dee, and I have a brand new 150K combine today. I'm going to try my new set of rules. One of them is for me not to trade so much until 7 a.m. and staying under 10 micros. I would say start on 5 micros. Why? Because 10 micros is 1 mini. I think in the beginning stages of an XFA, that's a bit much. Because remember, you're working with an initial drawdown of 4.5K. If you had 4.5K, would you trade 1 mini in your own private account? Would you trade like one NQ, which is the equivalent? No. because the margin requirements are too big, so you wouldn't be able to, right? So why do it in a new XFA? Do you have a train to catch? You're rushing somewhere? Rushing will just get you another blown account. So take it slow and steady. Take it slow and steady, size down, build up a buffer, and don't go from 5 micros to 10, right? Go start on 5, see how that goes. Do it for a week, see what sort of results you have at the end of the week. And then go, okay, can I go to 6 micros? So don't go from 5 to 10, right? 1 to 2 minis. We have that ability now through micros to not double our position size and increase it by 100%. Okay? So why not utilize that? Why not go, okay, I'm going to be, treating this as a business, and I'm not going to be, sizing up too quickly. I'm going to size up super slow. So let's see what happens, right? So try that. Don't don't do the whole, I'm going to YOLO it and then blow another account, which is not, it's not a big deal, but for some people, those sort of behaviors, they rack up, right? And if you don't have, a bigger budget for this, is it a good thing to be doing that? I don't know. I mean, maybe if you're already an advanced trader and you don't care, like your strategy and you're just looking to use these as a means to an end, and you have 20 XFAs racked up waiting in the wings, then that's fine. But if you're only working off 1 or 2 accounts, you're already blowing too many accounts by your own admission, and it's probably time to rein it in a bit and, I don't know, get a beta blocker and just breathe, I suppose. Maybe set a number of trades per day as well. That's worked very well for me, even though I was never a super hyper scalper and overtrader. But, it's worked pretty well. Okay, so this is probably not going to survive now, which is fine. Once this is done, I'm gonna move off of off of copper, because right now it's not doing what I want it to do. So to me, to continue to try and squeeze a trade out of this is counterproductive. So this is the point where we'll go, okay, thank you. Let's see what else we've got. And I'm gonna have a look around, and it's not gonna be NQ. Let's see. Okay, so crude oil is coming up to its own average session range low of London, so that could be an option. And again, I'm not freaking out. There's no I want to get it back. No, just want to see the quality of the levels that are around and whether there's anything there. So you see, I don't really like that. I do not like just having average session range low. I don't see any options levels that I can use here either. So crude oil is probably not going to be it. And then sometimes I can't find a good opportunity. That's all right too. I mean, gold has a level. Is it failing the auction or what's going on? Let's see. No, so gold is going into a neutral day type. That's very difficult to read. That's a no. Let's have a look at platinum. Platinum is also turning. And then if I don't see anything particularly good, I'm going to stay out. Where's my platinum? There it is. Okay. Yeah, apart from the initial balance low, I don't have anything here either. I have some levels up at 95 and 980, which we never got to. So yeah, maybe crude oil looks kind of acceptable, but I'm not too happy with the quality of the level here. Yeah, I'm not sure I'm going to be finding a good trade here again. So I may need to wait for things to shake out a bit before I look again. But yeah, so copper trade could have been a better outcome if I didn't have to deal with a dog, because I would have had a slightly higher entry. Maybe I could have managed this with a less drawdown, but hey ho, it's trading, right? So this is the whole topic of this week. Accepting losses, not freaking out, and just going, okay, is there a trade here? So, you know, I could just continue to do paper cuts here and rack up losses, or I could go and do something else, wait for the market to shake out, and then see whether I have any good levels a bit later on in the day. It's a much better choice. And paper cuts, they rack up very, very quickly. In fact, not having confidence in one level and then flipping and flopping around it, going short, going long, going long, going short, going long, that is actually the fastest way to reach your either data loss limit if you have one, or your maximum loss limit. All right, so let's see what crude oil does with these single prints here, because we have a few on the 30-minute chart. That's the only, like out of everything, that's the strongest. That is the strongest looking product now. We're also in a bit of a low volume area here. I mean, even if I expand this, let's go to visible range. This is still a lower volume area. So that means if we turn around, it's in a bit of a demand. It should act pretty quickly, but you know. So I'm going to change my dome to crude oil and keep an eye on this. All right, and this is where maybe the ribbon can come into consideration as well, seeing what we have on the ribbon. Somebody asked me to share my DMI settings. Yeah, it's just 5 and 10. So I'm going to show you that now. Here we go. So DI length 5, ADX smoothing 10. I wanted it super quick because I don't want to wait. Like that's not what I'm using this tool for. So therefore I want to see instant jump in momentum. So the curve is sloping on crude oil. It's upward sloping. And how many ticks would I need? Would that cover a low for my 35 tick initial stop? I mean, it would. All right, let's try that. Just for argument purposes. So my stop is below this entire structure. That's a good thing. Where are the round numbers as well? We have to take in that. So I'm going in exactly at 69.50, which is excellent. Just probabilistically, if you are under the round number for a long, that tends to be a stronger position. We're below VWAP. We did go into multiple single prints, which is against this trade idea. But could we come up to 270? Obviously, yes. Could we carry on lower to the demand at sub 70, sub 69? Yes. Is this a rollover week? Or is that next week? Usually we have crude rolling over on the 17th, but that's a Sunday, so I don't know what they're going to do with it. But yeah, we're going into a rollover week, which could mean lack of trending moves. So we'll see. This is not the best setup, but you know, I want to illustrate some of these concepts a little bit better. All right, so same thing now. Possible early exit. Why? Because if it keeps dipping below the ribbon and then it creates a black candle completely outside of the ribbon, opposite my trade, that would be my early exit. Okay. The same thing. I have a gamma exposure level at 69.50 that if we can't break upside, then obviously that's going to bring more downside. And then I have nothing. So again, it's not the highest probability trade, this, but yeah. Let's see what they do here. For now, look at the slope of the curve. So it's not exactly screaming downwards or flattening. It's a little bit upward, right? So that's still some sort of a upside sentiment. But if we can't get a committed move in the right direction, it's going to be an early exit. Okay, so for now, I have the white candle outside. So that's still not my signal to exit. Again, you have to be super objective with some of these rules because otherwise you're just going to take yourself out of a trade too early. And I always have my initial disaster stop at 35 ticks. And then I decide whether I'm going to scale in based on the quality of the setup. And I usually scale in if the setup is better, like if the setup is like super strong, which I thought copper had, but didn't quite happen. So that's all right. All right, so some buying occurring. Let's do a slurp of the coffee. And this would now be an auction fade. So without me drawing a whole bunch of things, why an auction fade? Because you have a successful auction downside. So the first step is to try and take out these single prints at 69.54. That's step one. Without that, we have no trade, right? If it takes that out, then we have the possibility of this reaching VWAP, which is sitting just under 70. So that's target one. If I had multiple contracts, I would consider getting out. So at least a third of the move, getting out. And then maybe holding it all the way up to the initial balance low, which would be my final 2R target. So that's how I usually plan out my trades. But this is just one lot for now. And there's really nothing, like it's got to be either all in or all out. So in this case, I would probably have it all out at VWAP. Did I miss any questions? I hope not. Okay. You do have options levels. Yes, I do use options levels and options activity because I think you have to these days. Ignoring that, the fact that, you know, options and 0DTs and, you know, we have now bi-weekly crude oil options and everything's gone completely nuts with the amount of volume that options are actually introducing into intraday moves. And I think you have to evolve. Like I've always used options activity to some degree, except back then I used to use Canadian dollar options for crude oil because we didn't really have that much volume happening in outright crude oil options. However, recently, like literally July this year, they introduced bi-weekly crude oil. And now we're seeing a lot more action happening around those big options levels. So yeah, I think you have to. You have to. Okay, so this is now 10:30 my time, meaning we're coming to the end of the stream. But I want to see what happens here now. I'm committed. Yeah, platinum is Dee's baby. Yeah, well, when it sets up, yeah, I mean, I love platinum, but it doesn't look right. Like, I don't trade it every day. It's not going to be like, oh, yeah, every day, you know? Can I ask you, what is your disaster stop for NQ and ES? Okay, so ES, 10 ticks. Sorry, 10 points. Jesus, 10 ticks. So 10 points. And likewise for NQ, it would be 35 points, 35 full handles. That means in ticks, quite a lot of ticks. So 35 times 440 ticks on NQ is my disaster stop. And then if I scale in, obviously that comes down. but you have to have some sort of an initial risk in mind. You can't just be scaling in willy-nilly. All right, so this is now about to potentially print another thing in my direction. So this Monday has not started the best, and that means I have to get my paws off the trigger and go do something else for a while. This is where trading different XFAs rather than trading just one XFA helps. So now, instead of going into a complete rampage on all of them, I could just go, okay, so that wasn't right. Let's just keep it at like 700 loss or something, 780. And let's wait, lock this one up, and move on to the next XFA. Okay, this is where that expansion of how many swings at the bat you get, it for me is a better approach. So using the multiple accounts as a way to effectively go, well, actually I didn't do well on the London session. Let me just now go to my New York session XFA and see whether I do better there once we've kind of shaken out some moves. So, it's to me, it's a better way than kind of derailing all 5 of them and just going, oh, I have nothing now, which many people do. And not many people, I think you look at some of the folks on TopstepTV that are copy trading, like Dakota, for example. He's a very skilled guy. Like you can't, and he's been trading for 15 years. I've been trading for 17. I still don't like copy trading, because I just think that if the day doesn't go well, you're then in danger of blowing up 5 accounts instead of 1. And also from an emotional standpoint, if it doesn't go well on 1, well, you still have the other 4, So just lock it up with a small loss that it's easier to get out of than going, oh, I'm just going to get this derailed completely and then we're going to lose everything. Use the accounts as leverage for an expanded loss limit, right? Don't go derailing everyone. Isn't that easier? Like just, emotionally, wouldn't that be easier than just blowing up all 5 of them and then crying about it? I don't know. At least that's the way I do it. I like to use expanded XFAs as, more swings at the bat. Why? Because conditions change throughout the day. So even though you didn't get the moves that you wanted in the morning, you can still kind of go, okay, well, now I'm getting what I want. This is a great setup. This is the better level. And, you get a chance to actually bail yourself out. Is that Grogu on your coffee mug? Yes, I'm a huge Mandalorian fan. And this is Grogu. Yes. See? And the other side says, choose your path. All right, let's take some more questions. So Bruno, I think I answered Lisa R's question, the DMI settings. I don't know whether you saw that. Andrew Mansour says, how long have you been trading with Topstep? Okay, so me and Topstep go back a while, man. So I came to Topstep in 2015. And I was the first female trader to ever get funded with them, right? So naturally, they reached out to me in 2015, and we did a little radio interview. They were running Squawk Radio back then, and Eddie Horn was doing that. That's how I got to know them. And then I saw that Hogue was very good at explaining things about the profile and stuff. So when I became a funded trader, they had this like market profile labs thing, but Hogue was also our risk manager at that point. So I had a lot of interaction with Hogue through the system and also through the market profile lab, where I was badgering him with like a million questions every time. And I learned a lot from him. So after that, I wanted to go and work for, to try and go work for like an asset management firm, which was not the right, like me and corporate environments just doesn't mix, don't mix. Cause I'm a former musician. And I like the more relaxed environment, you know, the whole like power suit and it was just like, no. So that turned out not to be the right thing. And then I traded for a few prop firms in London, but ultimately I came back to online prop firms in and around COVID because the prop firm that I worked at the time had some issues, obviously partly because of COVID, but also there was like a regulatory thing that suddenly stepped in. It wasn't a big deal. I think they're running now again, but I just decided to trade my own account. Had an amazing year for, well, 2 years actually, but that first year of COVID was like crazy. It was the best money I've ever seen. And it kind of made me think, well, maybe I should give my YouTube channel a bit more of a serious thought and not work for others. So that's how I stepped into the YouTube world. Very soon after that, I decided to explore prop firms again. I had some connections in the industry as well because I like to talk to people, so I do reach out to people. And it seemed like we were suddenly getting more people in the industry, like more prop firms and stuff. So I tried to go back to Topstep at that point, and I'm being completely straightforward. They still had the two-step process. I didn't like that. I felt that the industry was moving on from the two-step process and that it was too long, and especially for somebody who's not maybe brand new. So I thought it was, they weren't really adapting. And then, lo and behold, they did the entire rebrand, and Topstep came up with one step, one rule, and basically came back to the top. You know, it's something they've always done. They started the industry. And at that point, I was like, okay, well, maybe I should look into Topstep again. Interestingly enough, I invited Hogue to do some content creation for my channel. So I interviewed him. If you want to check that out, it is on my channel. I think it was about, oh God, probably about a year and a half ago now. Oh, let me bail out of the trade. What am I doing? Christ. I'm just sitting here talking and yapping while my trade is going against me. So with the whole Topstep and me, we've had a very long relationship, right? Especially Hogue and myself. We've been friends for a long time. Ever since I, got funded with them, it's been kind of a relationship that kept coming back, sort of thing. It's like I would do some content for them, then they would do some content for me, and then I would decide to do some more content. And it was just like a logical thing for me, especially. I felt that they've always had a good, especially Michael Tuck, that he's always had a good head on his shoulders. And when Hogue asked me whether I wanted to come and do like a little interview for power players, it wasn't even like, hey, come join us. It was just like, hey, you want to do an interview like we did so many times before, right? It was nothing new. I thought, okay, well, just another interview, whatever. But then they told me that they're doing this whole TopstepTV, like we did Squawk Radio. Now we're going to be on YouTube, and it's going to be this whole thing. So I was like, oh, okay. Luckily, at that point, my chronic illness was sort of under control. So when they approached me to be a more permanent fixture on TopstepTV, I was initially mulling over like whether I can handle that, because it is a lot of work. And as it turned out, I'm going to say it would have been too much if I carried on with my own daily live streams and TopstepTV. I wouldn't have been able to handle that. However, me being a little bit better at that point, I was like, okay, I think my energy levels can handle this just about. So I decided to take it on because I could see the potential. We have no other TV channel for futures traders. And I like that. I like the fact that Topstep is the first one to bring something very interesting, completely geared at intraday traders. We need this. Trading is very lonely, and you have a lot of talking heads channels like Bloomberg, CNBC, and all that. That's not intraday. That's not futures. It's stock trading. Do we have enough stock bloody channels out there? Yes. Where are all the future channels? Oh, we don't have them. And now that TopstepTV has done that, some other people are like, oh, maybe we should be doing this. So again, Topstep is yet again leading the way to innovation and to doing something new that nobody else has done. So that's the part that really appeals to me. And that is why, I'm here, why my relationship with Topstep has kind of come full circle, where I now run my own segment here. And, it's nice to be involved with people who are so passionate about trading, but also that are not out there to get you, if you know what I mean, especially with the stuff that's going on with fast track trading. We've seen a lot of really, really suspect things coming out of certain prop firms. Topstep has always been the shining beacon and a shining example that you don't have to be against the trader, right? Our interests are always aligned with the traders. We want you to get to a live account. We want you to do well. We want you to pass the combines. We don't want you to reset 1,000,000 times because fees are coming our way. It's not. And I see Bruno put the Mandalorian thing. So I will say, Topstep, this is the way. And I know some people are like, you work for Topstep. Yeah, but I work for Topstep because I like what they're doing. I have my own business outside of this. I don't have to do this. But I like to be involved with people who are bringing positivity and some good stuff, much needed, different way of doing things in the community. So we have TopstepX platform. We have, potential regulations coming, especially now that we've had FTT blowing up. So I don't know what exact repercussions will that have for the industry. But Topstep has always tried to be at the top of the game, compliant with all the regulations. And, it makes such a difference to trust the firm that if you do trade for them and you request a payout, that they're not going to ask you to do a bloody ritual rain dance before you can get your money out, So they've kept the rules simple, straightforward. What else do you want? It's amazing. I would actually prefer that we lower, and again, this is just my own personal, this has nothing to do with Topstep or anything, it's just my personal belief, that we should actually have a higher profit split in favor of the prop firm, right? So instead of this 90% stuff, 95%, 100%, no, let's go back down to 60 or 70, like it used to be. And that way the prop firms will be incentivized even more, not Topstep, but, everybody, to actually push people live and split money 60-40, When I worked for prop firms, I had a prop firm that was paying us 20%, like a hedge fund, and they were pushing size, but they were also giving us a lot of money to trade, right? And then you have some of the other firms that were sort of in the middle, so they were 50-50 profit split, but you would still have a trading partner that would provide you leverage, provide you capital, and they would they would provide all the risk systems and the infrastructure for you to trade. So, and the leverage, obviously. But yeah, it was still, some of them still operating on a collateral. So you put in 10K, they give you 100K leverage sort of thing. That's gone. And I like the fact that those sort of firms are kind of considered old school now, where you have to pay to get in, and that the entry to this industry, which is extremely difficult, is the lowest that it's ever been. And obviously, Topstep is leading the way, and I've come full circle with my relationship with Topstep, and I'm very glad to to be here and to be able to share my experience with all of you. And to have a couple of days of bantering with my colleagues, with Coach Jay, with Hogue, with MP, with Andre. Everyone is such a character, and even if you're not a fan of Topstep, you will watch because it's interesting to watch. It's there's a good dynamic between people, and they are only going to get better and better. Okay, so I'm waxing lyrical here, but we've gone 15 minutes over the stream. I'm going to finish it here with one last question. Dee, what do you think about trading a small personal account or using prop firms? I'm not in favor of a small personal account on futures. I did it on Forex when the leverage was like 500 to 1. And I used that to my advantage. But even so, once I made like 50K in my personal account, I added 60K of my own cash and then traded that up to about 500,000, which at the time was about 220,000 pounds. This was a long time ago. So I'm not in favor of trading a small personal account on futures because there's no point. The margins are massive and you won't get anywhere, right? So if you want to scale up, this is what prop firms are all about. Scaling your capital at very low risk to your own savings. And I will always say to people, if you're not already a successful trader, or if you're not, and actually not or, then and if you're not already somebody with a proven track record and very well capitalized, don't even think of trading your personal cash. You're just going to be throwing money away. Because you pay $49, you get 2,000 leverage on Topstep. And yes, obviously you have to pay $149 if you do get to an XFA, so that's an additional cost. But even so, you get effectively a $2,000 account for peanuts and no risk to your own savings. You don't have to plow in your 2K. Imagine if you were doing the same thing that you're doing with XFAs on your personal account. How much would that cost you? How quickly do you blow up a 2K account? Minutes, days, for most people. So what would happen if you kept doing that? You put in 2K, you blow it in a day. You put in another 2K, you blow it in a week. You put another 2K, doesn't even last a day. It gets expensive, right? But you keep doing that for $49 each time in Topstep. That alone is worth its money in gold, okay? By the fact that you're effectively experiencing the same emotional, myriad of emotions and a roller coaster, but for the smallest fraction of the price. So if you're a good business person, how can you not see that that's a great thing, Anyone who has any, half a brain and stuff, they will be like, why would I ever trade my personal capital? Obviously, if you're extremely well capitalized, like I said, and you're a proven trader, then, trade your personal money. I don't care. Because you've already taken payouts. You presumably already have a lot of capital because you've either done well from trading and or you have a business that is financing your activities. But if you don't have either of that, just don't trade personal capital. It's a disaster. It's one way to ruin your quality of life. Okay? All right, guys, that is it. So Paul H. actually has a good point. Small account, something to move after trading in a prop firm. Prove your competence. Prove it that you can do it through payouts, and then use the payouts to fund your account. That's the best way to do it if you really want to trade personal. Prove it. Get the money from prop firms. Plow it into a personal account. See whether you can do the same. That's a brilliant way. Okay? All right, guys, that is it. Click the like, click subscribe. It really helps me out with this channel. I did go over a little bit, but I had a lot to say, and I've just woken up like I normally do at the beginning. So let's see what this week brings. I don't know whether it's going to be very lively or not, but we'll see if we're going to get some moves, and if not, well, default to the range-bound day. Okay, Topstep VIP scouting. I've got some news for you. So we are going to be scouting for new traders to join the Topstep VIP in January. What do you get as a VIP? You get 3 free months in a combine, 2 free resets each month, no activation fee, private Discord with your coach and your team. And these are going to be doing drops between now and January. So if you want that, you need to keep signing up for them. I'm not going to be dropping them here. You're going to be seeing them during the main broadcast. Obviously, those with the most check-ins will have the best chance in the drafts. So keep tuning in. Keep tuning in. We also have Topstep Labs with Coach Dakota this week. That is on November the 13th at 5 p.m. Central. And that's only for 20 traders, exclusive to our Q&A. And just like Topstep VIP Scouting, if you want to be in this, you have to go to slow markets. So this one is not going to be dropped during the main broadcast, but it's going to be on slow markets only. So you still have a couple of days to get there. Pop into slow markets and check in and do the form. The more times you checked in, the higher the chances of success. So I see here that the winners are going to be announced on Monday in slow markets. So yeah, we only have one day. So I don't know whether maybe that train is gone. Maybe they already have 20 traders. But yeah, so that's going to be pretty cool. I'm going to see if I can get Dakota in here this week. Actually, we've been kind of chatting about it, but we didn't put a date on it or anything. And maybe after that we can get him over here to pick his brain, if you guys would like that. Anyways, this is it. I'm off. Let's take it slow, and let's see what the week brings. Thank you for watching. This has been TopstepTV, the London session with me, Deeyana Angelo. Take care.